Did you know that the market trades sideways 70 to 80% of the time? No wonder you feel like the market is against you. But here's the thing. You can make lots of money in sideways markets, but only if you know what to look out for. So in this video, you will learn what sideways markets are, how they work, and some of the best range trading strategies for beginners and advanced traders. But alright, so before we can start taking a look at the range trading strategies, it's very important to first of all learn the basics of range trading. So let's start here with some crucial information. So first of all, the first thing you need to know, and that you probably have realized if you have been trading for a while, is that market spends lots of the time in range-bound markets. Usually, we say that they spend around 70 to 80% in range-bound markets, and this makes range trading such an important skill to learn. But now, what is range trading? Well, range trading focuses, at least most often, on buying at or close to support and selling at or close to resistance, and of course during non-trending conditions. And the good thing about range trading is that you can use it to trade crypto, stocks, Forex, or any other financial market. But right, so now we have to take a look at some different terms and some different kinds of range bound markets, because if you have been trading for a while, you have probably heard some different terms like range trading, like sideways markets, and like choppy markets. So let's take a close look at the difference between these markets. So first of all, when we talk about range trading, we're usually talking about the strategy based on the price oscillating between a support and resistance. So it's a strategy when we have a market that looks something like this. It doesn't mean that the market has to be in a perfect sort of horizontal channel. In fact, in real markets, you will very seldom find these perfect markets. But range trading is all about trading these markets that are roughly horizontal channels. And traders in this market aim to profit from the price bouncing back and forth in this defined channel. Sideways markets is very similar. That is basically a market with no clear uptrend or downtrend, and the price moves horizontally with minimal direction. And many traders, including myself, use range trading and sideways market pretty much as synonyms. So when you hear these terms, they pretty much mean the same thing. Or to be more precise, a sideways market is pretty much the same thing as a trading range. But when we say range trading, we're usually talking about the actual strategies within the range. But lastly here, and this is a very important concept, is choppy market. And this is actually very different from the two previous terms, because a choppy market refers to an erratic price movement with no clear support and resistance. And more specifically, choppy markets is when you have markets that looks, very random. It moves, in a very unpredictable manner. And most of the times, these are markets we as traders want to completely avoid, because when the price movements are random, it means that us traders can't get a good trading range, and without any kind of predictability in the market, we can't make money. So my suggestion here is to really try to avoid these choppy markets. And as you can see here, they are often, harder to trade than clean ranges. And I would go as far as some of these markets are pretty much impossible to trade. They are very hard. But alright, so let's super quickly go over some more terms you need to understand. One term is consolidation, and this is a period when the price contracts and move within a narrow area. And it often leads to breakout once supply and demand imbalances resumes. And when we talk about consolidations, we're usually talking about, when we actually have a trend, we have an impulse move, then the market consolidates. Then we have an impulse move, then the market consolidates. A consolidation is similar to the concepts of pullbacks. The next very important concept you need to understand is support and resistance. And support is the sort of lower boundary where buying typically occurs, and resistance is the opposite. It is the upper boundary where selling typically occurs. And in this video, we don't have time to dive super deep into support and resistance, but luckily I do have a full support and resistance trading course right here on YouTube, and I'll make sure to link that course both in the video card and the description below. I highly recommend that you check that course out after this video. The last thing I do want to mention is called market cycles, and these are ranging phases often follow trending moves, and markets tend to alternate between something we call accumulation, markup, distribution, and markdown phases. This right here is what is commonly known from a guy called Wyckoff, and he has a whole framework. This is called the Wyckoff trading method, and this one can be super useful to learn, and luckily I do have a full course on the Wyckoff trading method, so if you have the time, make sure to check that video out. This one will also be linked in the video card and the description below. But alright, so now let's switch the attention to something very important, and that is how to identify a range-bound market. And the most important thing to learn when it comes to finding range-bound market, at least in my opinion, is to learn market structure. So what we are essentially looking out for is an environment where we don't have an uptrend, we don't have a downtrend, and when we don't have an uptrend or downtrend, we always have some kind of sideways market. That is the only market that is left. And in super simplified terms, what we're looking out for is basically repeated touches of similar highs and lows. These highs and lows, as I said, don't have to be at the exact same level. They can dip a little bit below the support, a little bit above the resistance like this, but they should be at the around same level. But in this video, we don't have, once again, we don't have time to dive super deep into market structure, but luckily I do have a full market structure trading course as well. So I highly recommend to check that one out after this video. But I do want to talk about some things that can help you find range-bound markets, and one such tool is to use a moving average. Personally, I'm not the biggest fan of moving averages. You might know this if you're following the channel. I'm much more, a market structure and the price action kind of guy, but many traders do use moving averages and they can be helpful, so definitely check that one out. Another thing you can use is the ADX indicator, and this one can suggest when a weak or no trend is suggest if a trend is weak or if we have no trend at all. And I relatively recently made a video about the ADX, so you can check that one out as well. Some other things you can use is Bollinger Bands. They are often narrow and parallel when we have a range. And you can also use the ATR indicator to spot low volatility phases that are typical in ranges. But alright, so now let's actually take a look at some core range trading strategies here. And I do want to begin here with a support and resistance bounce strategy. And this is actually a special version, which I call, and many other traders call, the failure test strategy. This one is one of my favorite trading strategies, actually, can be super useful. And I'm gonna show you guys step by step how to perform that strategy soon. But in general, what support and resistance strategies are about is buying near support and selling near resistance. And also, we usually want to avoid trading in the middle of the range. So the entries are often found very close to the boundaries of the range. And many times when we use range trading, we tend to use pretty tight stop losses just outside the range. Or when it comes to the failure test, we usually have very strict rules for stop losses where we set them just below the low or just above the high. Don't worry, I will show you guys very soon. And many times we also wait for some kind of confirmation before entering. But alright, okay, so now let's actually jump into TradingView right here. As you can see, we are right now looking at Bitcoin. This is the live market on the 5-minute time frame. But what you can notice here is that Bitcoin has been in a pretty clearly defined range here recently, or we still are in this range right now. And what you want to do, first of all, is of course to identify the range. And in this case, I think that many of you guys could have easily identified this range because it's so clear. We have one high right here, we have another high right here. So what I do is that I use the rectangle tool in TradingView. You can find it right here, geometric shapes. Then you choose the rectangle, and I want to include both touches. In this case, they are at the exact same level, but I prefer to draw out a sort of broader zone. We can have the touches here in the middle of the zone because both support and resistance tend to not really be perfect lines. They tend to be more as zones. And the same thing is done with the support level right here. I want to include both touches of this support as well. So right here, very clear example of a trading range. But now you might wonder, how do we actually trade this range? And this is where the failure test pattern comes in. And the concept of the failure test is very simple. We want to have either a support or resistance, like we have on this range right here. And what we're looking out for after we have confirmed the support and resistance is that we're looking out for the price to briefly break below the either the support and resistance and then shoot above. This is very powerful because when the price breaks below right here, this often leads to that traders that have been trading this range, they often have their stop losses below the lows. So when the price dips below, that usually leads to, stop losses getting triggered, which leads to more liquidity. And that is often a good entry point for smart money, which then pushes the price up. So you can see that during this candle, what you can also look out for is lots of volume. We had, not super impressive volume, but definitely a higher volume compared to the previous candles. And you can also see here that we got this break of the support. The price briefly pushed below and then quickly reversed. Another thing that made this entry even better, in my opinion, was that if you look closely at this candle right here, this was actually a clean hammer candlestick pattern, and a hammer is a bullish candlestick pattern indicating a reversal to the upside. But all right, so now let's take a look at how we could have traded this. So since we are at a support, we're of course entering a long position. So let's choose the long position right here, and the entry point tends to be at the candle close of the candle that briefly broke the level and then pushed above. So since it's a red candle, the candle close is right here. And as for your stop loss, you usually want to set the stop loss just below the lowest point of the break. So you set the stop loss below this point right here. And if we used a risk to reward ratio of 2, our profit target would have been right there, and we would have locked in some nice profit. But okay, so I do have some more trading strategies I wanted to talk about, but this video is getting quite long, so I will save the rest of this presentation for our YouTube channel members. If you didn't know, we have a community right here on YouTube where I post presentations like this one right here. I also post exclusive videos, some exclusive trading tools, and much more. And at the same time, if you become a member, you are of course supporting the channel. So I'm super thankful. If you want to join, you can do that by clicking join down below. And now, in order to really master range trading, I highly recommend to dive deeper into market structure. So if you have the time, I highly recommend to check out this full market structure trading course next.